What are the top stocks and those horrible investment potholes for 2019? Okay, 2018 was hard to find any asset class that did any good. What's an asset class that will again perform poorly in 2019?
Yeah, look, it's a newer asset class that I think will continue to struggle, and that's cryptocurrency and Bitcoin. You've seen a sector that's got really no tangible value, overloaded with speculators, with some real structural issues, becoming sort of a universally accepted payment scheme. So I think if anyone is anything crypto, you'd be doing better elsewhere.
I think the safe bet for us is Aussie housing. It's a slow-moving asset class. I think there's plenty of momentum to the downside still to go in 2019. So we don't think it'll bottom out until 2020.
Percentage?
Another 5 to 10% from here.
We think it's the US dollar. We think the US dollar is one of the largest asset classes out there, and we think that's headed down. US budget deficits rising, extreme crowding from the Commitment of Traders report from the speculative community. It's been a one-way trade, and we think that unwinds next year on the back of a Fed that doesn't raise interest rates anywhere near what the market's thinking, decelerating US economic growth, and that's going to have big implications for emerging economies too.
I think the US dollar's been a powerful mover of markets globally the last little while. It's been on a bull run. I think they're starting to hit the wall economically, and that the currency will start to head south. It'll be one of the first indicators. Mightn't happen in the first quarter, but over the whole year.
I think the AREIT sector I pick because I'm bullish on the market next year. I think there's actually been a bit of a deterioration in fundamentals in some of those names, but there's been this safety flight into the sector. So I think that could unwind and the fundamentals shine through a little bit.
All right, let's get down to the nitty gritty. What's a stock that you would pick and recommend for 19?
Yeah, so I'm going to go with Xero. This is a business that could double its revenue base in the next 2 years. But catalysts for next year, the UK are forcing digitisation of tax returns to small and mid-sized businesses. Xero is the #1 player now in the UK. And secondly, there's massive payroll reform happening in Australia, which is going to force a big uptake of electronic solutions in businesses here. And in the background, you've got the slow burn in the US, which I think is tricky, but they're starting to make real inroads. So that's the stock I pick out for having maybe a breakout year next year.
We've already talked about Tesla as a short, so I'm going to go for a long. We're finding it tough to find good long ideas in the Aussie market. So the one we'll go with is Alphabet, global leader in online advertising, trading at a reasonable multiple, $100 billion of net cash on the balance sheet. And I think this year or next year, 2019, we'll find out about how they're going to monetize some major businesses like Waymo, which are currently loss-making. So Alphabet for us in 2019.
We really like the gold sector. The gold sector's run very hard in the last 3 months, but there's a stock that hasn't, Alacer Gold, and there's a reason it hasn't. It's capped at 700 million. It's commissioning an autoclave, which hasn't been done in the world for 9 years. It's also happened to do it in Turkey. Not a great place to be spending 700 million at the moment. However, we think that risk is priced. It's on half times book value. It's going to generate 150 to 200 million of free cash flow for up to 20 years, which is the mine life. And so we think there's extraordinary value there. We think that's a $4 stock.
I don't think you want to be too defensive. I think when the markets hit bottom, that could be March, April, May, somewhere around there. We've had enough time to absorb it. You want something with a bit of leverage. And in Australia, believe it or not, I think it could be one of the banks. NAB, which is under the most threat, it's the cheapest most threat from a dividend cut. I think even if they cut the dividend from the 99 cents each half to 90 cents for capital reasons, I think the stock can rally. What will really drive that domestically, the retail investors, if franking laws change, banks will be more popular. They're yielding a high number at the moment.
You need to be looking at something defensive, something that's undervalued. So we're looking at Murray River Organics, which is a sort of fruit and nut supplier. It's done basically a Hail Mary capital raising at less than 10% of what it was floated for a year ago. They've got earnings, a new management team, a new board. They supply to the likes of Aldi, Coles. We think it's a bit of a sort of a down and out stock, but we think that could produce some good returns. It's trading below NTA.
Thanks, Dave.
Thanks, Matt.
Good stuff. All right, well done.
Don't have to do that take again?
No.